Welcome back to the Malaysia Money Matters show. It's the 29th of October 25. Our mission today, as always, is to cut through the noise. We'll distill the key Malaysian corporate, financial, and political news from the last day or so, plus the big global stories you need on your radar.
Okay, let's dive right in. We're starting with some pretty significant corporate action involving KNM Group and the stock exchange itself. Bursa Malaysia Securities is actually taking MAA Group to court.
To court, what's that about?
They want to block an extraordinary general meeting, an EGM, that's scheduled for tomorrow, October 30th.
Ah, okay. And that EGM, that's one about KNM selling off its German unit, Deutsche KNM, right?
Yeah.
For about RM 1.34 billion.
Exactly. And for KNM, this isn't just some minor deal. They're under PN17 status.
Financially distressed, basically.
Right. So this sale is absolutely vital for their whole turnaround plan, for settling their debts. It's make or break, almost.
So why is Bursa stepping in? Are they saying the deal itself is bad?
Not exactly the deal itself, it seems. It's more about the process. Bursa is arguing that holding the vote would breach listing requirements, procedural issues, essentially.
So for you listening, this is quite interesting. Is Bursa ensuring rules are followed or potentially hindering a company's vital recovery path?
Yeah, it could set a precedent, couldn't it? For other companies in that PN17 category trying to execute these crucial deals, a space to watch.
Oh, definitely. Okay, moving from potential trouble to raising capital. SP Setia.
Yes, the property developer. They're setting up two Islamic note programs, a big Sukuk Wakalah for RM 3.5 billion and an Islamic commercial paper program for RM 500 million.
So RM 4 billion total. That's a hefty sum.
It is. And the structure, particularly the Sukuk Wakalah, which is asset-backed, gives them a lot of flexibility.
Flexibility for what exactly? Just paying bills.
Well, yes, for
Yep.
working capital and expansion, the usual things. But importantly, it also explicitly allows them to issue sustainability Sukuk later on.
Ah, positioning for that green financing push. Smart.
Exactly. Okay, sticking with assets, let's talk Plantations. Maybank IB has highlighted a couple of names.
So, who are they tipping for potential M&A activity?
They're pointing to Sarawak oil palms and Seng plantations as prime candidates for privatization.
Why them specifically?
It's classic undervaluation, according to Maybank. They reckon these companies are trading at discounts of like 37% to nearly 50% compared to actual physical land transaction prices.
Wow, that's a big gap.
It is. And crucially, both companies apparently have strong net cash positions. So a buyer could, theoretically, use the company's own cash to help fund the buyout. Makes them quite attractive targets.
Interesting. Okay, let's shift to green energy expansion. Yinson Renewables.
Yeah, good news for them overseas. They've received approval from New Zealand's Overseas Investment Office.
So that clears the way for their projects there.
Pretty much. It allows them to push ahead with their renewable energy pipeline in New Zealand, and the focus seems to be specifically on wind energy. A nice international step for them.
Good to see. And quickly on the consumer front, Nestle Malaysia.
Strong numbers. Third quarter net profit jumped 34% to about RM 114 million.
Driven by.
Higher sales, apparently, but also good cost control. And they've declared an interim dividend of 60 cents per share. It backs up their guidance for a return to healthy growth in 2025.
Solid performance. And looking even further ahead, Monash University. Big news there.
Huge news. They've confirmed a new campus in the Tun Razak Exchange, TRX, a RM 2.8 billion investment.
RM 2.8 billion, that's massive.
It really is. It's planned to be operational by 2032, accommodating up to 22,500 students.
But I'm the focus.
Key future areas: AI, cybersecurity, advanced manufacturing. It's a major signal about investing in, that high-skilled talent pipeline for Malaysia's future economy.
The significant long-term bet. Okay, let's pivot to the political and international stage. That U.S. trade deal controversy.
Right. Prime Minister Anwar Ibrahim has come out denying that the agreement compromises Malaysia's sovereignty. He's emphasizing national and economic interests.
But the concerns haven't gone away, have they?
No, they haven't. Parliament's Special Select Committee on International Relations is actually launching a hearing on November 12th. MPs are worried, particularly about one specific part, Article 5.1.
What's the fear with Article 5.1?
The concern, essentially, is that it might compel Malaysia to copy U.S. trade restrictions against other countries.
So potentially being forced to restrict trade with, say, China, if the U.S. does.
That's the core worry being raised, yes. It's that question of balancing a key partnership with maintaining independent foreign policy. A tricky line to walk.
Indeed. And staying with international cooperation, Bank Negara Malaysia. B&M.
Yes, they've committed to sharing some data with the U.S. Treasury, specifically confidential data on net foreign exchange purchases and sales.
Confidential data, how's that working?
It'll be on a 6-month aggregated basis with a 3-month lag, so not real-time specifics. It's framed as continued cooperation on macro and currency issues.
And this follows Malaysia getting off that U.S. currency watch list last year, right?
Exactly. Seems like part of maintaining that smoother relationship through transparency.
Okay. Now, globally, Amazon and job cuts.
Yes, quite significant. Amazon announced cutting around 14,000 corporate jobs globally.
And they explicitly mentioned AI.
They did, citing the increased use of artificial intelligence to automate routine tasks as a driver. It's a very direct example of AI's impact on the workforce, isn't it?
It really is. And connecting that to future tech, Bill Gates made a comment about China.
Yeah, he noted China is outspending the rest of the world combined on next-generation nuclear power, both fusion and fission, by ×2.
×2.
Massive investment. China's clearly aiming for dominance in that next wave of clean energy, which, will be essential for things like powering all those AI data centers.
So let's try and tie some of this together for you, the listener. What's the big picture here?
Well, you see these powerful simultaneous forces, don't you? On one hand, AI is starting to automate jobs, like at Amazon.
And on the other hand, huge investments pouring into the tech and energy needed for that future, like the Monash AI focus here or China's massive nuclear bet globally.
Exactly. And for Malaysia, navigating this pivot is critical. Making strategic deals like the U.S. pact work, ensuring transparency like B&M's data sharing. It's all part of positioning the country.
The world seems to be accelerating into this AI-driven, energy-hungry future. Decisions being made right now, from court cases involving KNM to billion ringgit campus plans, are really setting the stage.
They really are. It's about whether Malaysia can build the foundation to lead or risks lagging behind in this rapidly changing global economy.
If you want to stay ahead of the curve with insights like these, make sure you subscribe to the Malaysia Money Matters podcast. Hey there, thanks for tuning in. If you would like a deeper dive into all the investment opportunities from today's news, subscribe to my newsletter at moneymatters.substack.com. I will be sharing a deeper analysis of the key investment opportunities from today's news, including what makes these opportunities stand out and how they fit into the broader market trends. By subscribing to the Malaysia Money Matters newsletter, you will also get exclusive insights on my watch list and portfolio and fundamental reports on Malaysian listed companies.